Hi everybody, this is Osprey from mychartcoach.com. And in this video, we're going to take a look at some of the China stocks. Today they were running the China stocks from China, China sector stocks, whatever you want to call them. Many times when one stock will be running, like ticker symbol YECO today, they run the entire sector, and that's kind of what happened. They heated up slowly. A lot of these stocks have really low average daily volume, and so you hit the runs while the volume's there, but you have to exit before the volume dries up because they become tough to sell once the rally is done. Keep in mind, most of the time these China stock rallies are very short-lived. They usually don't last very long, so be careful. You don't want to you don't want to get a bad entry point and get stuck holding the bag. So that's always something to be worried about, concerned about. Another thing, I'm just going to show you four China sector stocks here in this video, but I did today in the chat. We had a whole bunch of them that we were posting. There's a ton of China stocks in play right now, so if you'd like to check out more charts and technical analysis on other stocks in the sector that are in play with very similar chart setups, please come check out the premium chat. Okay, so first up, let's look at YECO. This was a huge winner today. You never know, which one's going to turn into the giant gainer. It started off and just kept pushing higher. The one thing that does have me concerned on this chart is RSI here at 95.35. That's an extreme level. You can see back here it got above 70 back on that June rally. This is a chart I made from June, the last time it had a big run like this, and so this is a very high level. It will not be able to sustain, but at this level on RSI. So keep that in mind. There's not going to be many more days left in this rally, more than likely. As you can see here, it's hitting up here at 74 on Fasto. There hasn't been a single close above Fasto in months, including on the last runs, because of the long upper wicks. It usually sells off, pulling back because they sell shares into the rally. So keep that in mind. Check out Plus DI here at 86. That's an extreme level. Above 40 is high for Plus DI. And as you could see on that last run back in June, when it had a huge run, it was up there above 50. So at 86 here, this is an extreme level even for this stock. So keep that in mind. It's signaling temporarily overbought. Also, you have today's candle that pushed well above the upper Bollinger Band. You have the upper Bollinger Band down here at 570, and the first support level is EMA 4 at 499. That is the downside risk if the candles do work back into the bands. Now, it was trading higher, and after hours trading, it was at 1432, and so at 1432 and after hours trading, which is awesome. Congrats everybody that ended up holding overnight. It's always a risk to hold a stock that's up over 500% overnight. So, because you could have a gap down open, and there could still be a gap down open if they sold off pre-market. But right now it's looking like a gap up open. And so congrats to everybody that held overnight. Sometimes the best thing to do is to, hold half and sell half when you have that dilemma on whether or not you want to stay with the trade. But yeah, it's always a risk to hold when a candle closes well above the upper Bollinger Band, because the candles could work back into the bands. Now, if you look back here on the run back in June, it had that first big volume spike you can see on the 25th of June, and it closed above the upper Bollinger Band. And then the next day it did push higher, and it closed slightly above that level, and then the candles worked back into the bands. You could see a similar type of move this time, so keep that in mind. If you look here, the volume seemed really large back in June compared to average daily volume. Check out how this stock normally has no volume at all. So the volume today was abnormal. It was an incredible amount of volume. It was the largest volume day in the history of the company. They did have merger news. They have news behind this, but it's just gone parabolic. This is a giant flagpole. So the downside risk is a pullback to EMA 4. What you could see is the high here from back on June 25th. That's right in the right around in the 640s. Look at that as a potential support level if it did pull back as well. Yeah. So and also another red flag is look at the MACD line. Check how it's as vertical almost as the histogram bar. That is completely unsustainable. Nothing can go in a perpendicular line like that. So keep that in mind. Okay, yeah, and so what you need to look out for tomorrow is the black candle. So if there's the gap up open tomorrow and it starts trading below the open, and you see either a black candle forming on the stockcharts.com charts, or on thinkorswim or other platforms, you might see a hollow red candle. The key is, if it's trading below the open tomorrow after a gap up open, that's going to be a red flag signaling people are locking in gains. So keep that in mind, okay, because you don't want to get caught holding the bag on this one. Okay, so if you look here on this Fibonacci retrace chart, you can see here the start of the run, the close from yesterday was down here, and the top of the run was up here. And so yeah, you're looking at for a 61.8% retrace. That would put it at that $6 level that we just talked about from the from the close, from the high from back in June. And so a 61.8% retrace would put it back to that high from June. If it pulled back into the Bollinger Bands, which could very well happen, which is going to happen at some point, the candles will work into the bands. Keep in mind the Bollinger Band and EMA4 are rising, but the candles always work back into the bands. That's always a red flag when there's a close well above. And so EMA4 at 499 is going to be that support level down below, and that's the risk here. Is you could see, now that it's up here at 1432, I mean, you could see a 70-80% drop just to come back down to down into that EMA4 level. That is the risk. And so if you look here at the YECO monthly chart, you could see here what a move. Okay, so this is, so yeah, I gave you the danger. I mean, it was awesome. It was a great move, huge gap up. Got to be prepared to lock in gains. But check out how on RSI here, it's only at 56 on the monthly chart. So in a longer term perspective, it does have room to run until that 70 level. And this is the highest level on RSI in the history of the company. Same thing with Fasto. It's never been this high on the monthly chart. So the chart's really cooking. It did have the bullish crossover on ADX, and so that's another signal the bulls are taking over. It had a parabolic SAR flip, the green dots flip below the candles. This month, it's pushing above the middle Bollinger Band, the dotted purple line, EMAs 4, 8, and 13, and then also above the descending resistance line, and this downtrending megaphone type of pattern. It's trying to break above that descending resistance line. That's right here around 675 or so, 650, and so you're going to want to see it stay above that level. Basically, the upper Bollinger Bands at 681. If the candles work back into the bands, it could get back into this previous pattern, come down, possibly test that middle Bollinger Band down here at 280. If it can stay above that 650, 675 level and break above $10, what you have is these candles from back here between 2015 and 2016, and you could see that 14 level is this red line right here, and so you could see that was support here, and then when it broke, it became resistance. And so the reason why you saw it close here at 14, because this is a huge level. If it could turn 14 into support, it could possibly run up into the 20s. It's hard to see the numbers over here, but it looks like the all-time high close is up here around 30 or so from back in 2015. And so the thing is you never know, like, how high are they going to push it? You have no idea. You can check out how it has the largest volume spike in the history of the company this month. What do you do when you have no idea? Well, today it was really easy, okay, because people are like, I don't know when to sell, I don't know when to sell, and so when it got above EMA4 here, as long as that level was holding, the signal was to keep riding, and you could see that the level did not break until right here at 2 o'clock, and so this was a lock and gain signal. We also had a red flag here at 1 o'clock with the climax spike. You had an increasing volume pattern, and that led up to what looked like a climax spike followed by a red candle. It did push a little higher after that, but notice how it closed right in the range of that where the climax spike occurred today, where the largest volume spike, and notice how volume tapered off. And so that is the big level. 1050 is a huge level tomorrow. You want to see it stay above 1050. If it retraced and then drop below 1050, that would be your red flag that it's cooling down. And so the break below EMA 4, that was a red flag. But the interesting thing was it was able to hold EMA 13, and that was your clue. The fact that it never broke below EMA 13 the entire day, there was never a solid complete exit the trade signal. If it got below the middle Bollinger Band at 874, that would signal downside risk, the chart's broken, the bulls are no longer in control. But since it held the entire day, that was signaling that it had potential to push higher. The break below here, this was a signal, okay, yeah, I better lock in some gains. I'm not going to be a pig. I don't want to leave everything on the table. But it did signal with holding EMA 13 that it could push higher. So keep that in mind. If it had closed below the middle Bollinger Band, that would have been a red flag signaling downside risk. Tomorrow, if it does get below the middle Bollinger Band, currently at 874, that's going to be your big clue. Okay, yeah, the bears are definitely in control. Right now at 1432, we're going to be dealing with the gap. So tomorrow I will be charting this in the chat. If you'd like to check this out in real time, please come check out the chat. Okay, let's look at a couple other these China stocks. You have ticker symbol CADC. Notice how it's above 50 now in RSI after being down here at below 30. It needs to stay above 50. You have Fasto above 20, a bullish crossover on ADX. And so this broke above several moving averages today. It had broken above the 150 and 200-day moving averages, but it pulled back below. That was a red flag. That was actually a sell signal. Once you break above those levels, it needs to stay above. So the big level to break is going to be this gold line. That's the 100-day simple moving average at 478. Failing to break above that level signals more consolidation. If it can break above, then it could possibly retrace back up to the 675 level. You can see it topped out where there was big resistance here. That's where it kind of had this double top type of thing in July. And so 675 is a big resistance zone. Notice where they closed it. They closed it right back inside of the channel. And so it's back in this downtrending channel. All right, it's at the top of the channel. And so the downside risk is it comes back down and tests the bottom of the channel. If it fails to break above that 200-day simple moving average at 394, the 50-day simple moving average at 423, and the 100-day simple moving average at 478. Trading above 478 tomorrow would be bullish. Trading below the 300-day simple moving average at 353 and the middle Bollinger Band at 349, trading below 350, that's going to signal downside risk. Notice the big volume spike today. There's big volume behind the move, so we're going to see if they can push it higher and get a multi-day run going like they did back in June, or if this is going to be a one-day event. Okay, let's look at CDTI. It closed in the 50 to 70 bull zone today. You've got, and notice how it fails to get above 70. Most of these China stocks are going to have a hard time getting above 70 on RSI, so keep in mind when they hit that level, that's usually a sell zone. Same thing with Fasto. When you get above 80 on Fasto on most of these China stocks, that's where people will be locking in gains. So keep that in mind. Most of the time, they cannot sustain above that level. You had a bullish crossover here in ADX. Notice it topped out last time here at 35. Yeah, we're going to see if they can break the 100-day simple moving average here. It ran up to this gold line. That's the at 239, the 100-day simple moving average. It's also lined up with this top of this channel. So you notice you've got this long multi-month channel here, and so there's this descending resistance across these tops, and then you have a descending resistance across these tops in this other channel here, and so it's really to me it's all coming down to this 275 level. And so if it gets above that 100-day simple moving average at 239, and then you see CDTI trading above 275, that should be the green light signaling it wants to head higher, and then you're shooting for that 200-day simple moving average at 388. If it fails to break above this 250 resistance zone to 275, it's just going to be back in this channel, and it's hitting the top of the channel, and then it could come back down and test that 50-day simple moving average at 188 and the middle Bollinger Band at 179. It needs to hold those levels to keep the uptrend going. Notice you've got the volume spike, but notice how many times volume spikes are followed by red candles, so you can't get too excited when these China stocks get volume spikes, because many times, since they are very, very low average daily volume, that's your clue, they use the volume spikes to sell shares, because nobody's really interested in these crappy stocks unless they have volume. And so let's call it what it is, right? I mean, come on. These are really, really junky stocks, and they're just really trading vehicles when they are running. Let's be real about it. And so you have a crossover here on MACD on both time frames. And so the MACD crossovers for these China stocks is signaling the possible start of the next push higher. So we're going to see, and this one already had a parabolic spike. So we'll see if that can signals the next push, or if it's just going to be a one-day event. Now, finally, let's look at CCCL. CCCL. Okay, so it's above 70 as well on RSI. So we're going to see if it can stay above that level. If it dropped below 70, that would be a red flag. Notice the fast O is way down here at 42. That's because of the long upper wick on today's candle. When you get a big pullback off a high day, that lowers fast O. You do have plus DI at 68. That's a red flag. It's unsustainable to stay up at that level. So today you've got a big flagpole with the giant volume spike. Volume spikes generally when there's a big green one are followed by red candles. And notice how the volume just drops off. I mean, look, big volume spike and then no volume, and they walk it down on no volume. Big volume spike, no volume. It's just like these are so risky to hold overnight because of that, because the volume can dry up and then you have a hard time selling. And so for tomorrow, the stop loss level, it did close above resistance. I'm not trying to be doom and gloom. You just have to be really careful on these China stocks. It made a bullish move today. It closed above all these moving averages. That's freaking awesome. And so if it can stay above the 200 and 300-day simple moving averages at 166 and 167, then it can push higher. That's the line in the sand. Above those levels signals upside potential. If it drops below, that's going to be a sell signal. It did close above the upper Bollinger Band today. Anytime you get a close above the upper Bollinger Band, the candles can work back into the bands, similar to here, 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 here. I mean, is history going to repeat and the candles work back into the bands, or is this going to be the one time that it pushes higher? We'll see. Maybe it will be. I mean, this was the time YECO broke out and freaking ran, 500-600% today, or even more with after hours trading. So it's all comes down to this level here. What has to break to the upside is going to be this high close in July, which is right around at 185 or so, and then you have back here in February, which is right around 215, and then today it topped out at this high close zone from back here in January, which is right around 250. Okay, so those would be the big levels to break above. It did also have a close above the descending resistance line in this channel here. It's kind of a descending triangle or a falling wedge. It's a downtrending channel, and so the close above descending resistance does signal more upside potential. It was a bullish close. The long upper wick is a red flag. I should have had accumulation distribution on here for you guys, and that would have shown a likely spikes down. But yeah, that's. We're just going to see if it can stay above support there. And it had a giant volume spike today. Notice every time you have a very big volume spike, a red candle follows. The big one, red candle, big one, red candle, big one, red candle, big one, red candle, and then notice how it's a drop off on volume. So it'll be a bullish change in trend if tomorrow there's like giant volume and it's green and they're pushing higher. That would be cool to see. I would be impressed with that, and that would make these China stocks more credible, or at least better trades if they could sustain a multi-day run. All right, just remember, black candles signal danger. And always lock in gains. And bulls and bears make money, but pigs get slaughtered. All right, entry point is everything. If you take one thing from this video, remember E pi. Entry point is everything. All right, thanks for viewing this video. Please come check out the chat. Thank you.